All right, all right.
Hey,
Hey, it's
Hey,
another water
how
cooler Wednesday. What do you
how you
think?
all doing?
I'm over like, all right. Look, I'm at my usual place, but they're a different place today. So,
yes, we are.
right. Welcome
I'm
everybody.
poolside.
Yeah, poolside. All right. And then maybe somebody wants to know some stuff about pool insurance with the pools too. So,
Okay.
Right,
Just don't
there
slip
you
in it.
go.
right. So today we want to talk about, let's talk about insurance. So
Okay.
what are the things that we need to know about homeowners insurance while you could be purchasing a home or already in a home. So this is a good time for us to kind of think about our homeowners insurance and what we're actually got covered.
And
So
while you guys are thinking about some questions for that, I just want to give a really, really, really quick update as we introduce ourselves, our host, the illustrious Dion Branch with eXp Realty and Allure Dream Home, and then myself, Lisa, the House Money Mama. So listen, I want to bring this up for you guys today because every week we try to say a little bit of something about things that we see going on in the market and real estate industry and stuff like that. So I read an article that was talking about in the state of Texas, they actually have legislators that are considering putting a limit on how many properties that investors could buy. I think they're primarily targeting the larger investors like the hedge funds and things like that. But it sounds like it may even be applicable to the smaller mom and pop type shops too. So it's something to keep your eye and ear out, listening and looking for. Because, a lot of times when stuff happens in one state, then at some point in time it trickles down to another state. So um, that could have a impact in maybe a couple of different ways. One of the reasons people don't really talk about this in mainstream media, but one of the reasons why we're experiencing a housing shortage really is because we have the hedge funds buying so many of them. They come in and buy 25, 50, 100, 200 houses at one time,
yeah,
single family homes. And so that causes a short in the market, which is what we're seeing, which is why we have so many people. They're all vying to get the same property because the hedge funds went out, they purchased all the other ones. So what's left, we have people scrambling and kind of fighting over. So
yeah.
I'm really curious to see what that's going to, turn out like as they contemplate putting some kind of legislation behind what's going on in the real estate market right now.
And so, Lisa, that's obviously like state related, specific at that point, right? A state regulation,
Yes, yes.
potentially, right? Okay.
This is specifically in the state of Texas right now, but I wanted to bring it up because a lot of times when
Yeah.
we see one state do something, a lot of times other states will follow suit. Like if they see and think it's working, they may try to jump in and do something similar.
Right.
Yep.
Well, right now, there, like you said, there are a lot of large company investors that are actually buying lots of property, and
Hmm.
people are moving to different states. And I think Texas is one of them where they
Yeah.
are saying that the people that are moving there who are thinking that they are going to be able to take advantage of the buying a home are not. And the investors are like, well, why don't you want to just rent? And so it's about the American dream. So maybe one day, we'll talk more about this, this topic, because I'm sure there's a lot to discuss. Definitely saw
Absolutely.
something on 2020 about it.
And
Oh,
even to the point now that Lisa brought that up, I know that today's conversation is going to particularly like focus around homeowners insurance. But when we talk about Lisa brought this up earlier at a later a different conversation. We could have conversations that's geared towards entrepreneurship with commercial insurances or business insurance, or even to the point where we were talking about investing. So an investor, and there's more of a risk management hat that you'll put on where you could offer certain types of protection mechanisms, hold harmless agreements, making sure a person is on there as an additional insured, making sure that the property is properly insured if it's owner OC versus non-owner OC. there's some little trickery that goes on that with that way, not so much from the insurance standpoint, but that you see customers try to play. So in the future, we can have more targeted conversations that is germane to, i.e., investing or business insurance or commercial insurance or even life. So I know that we have the house money mama that lends you money, and then we got fabulous Dion from EXP. So it's going to be targeted around the homeowners policy. But in the future, we could also have those conversations from the investment angle, risk management, and so forth.
Right.
Absolutely.
All right. We've talked about us a lot, but I don't know if we've introduced you. So we got
No,
Eric Johnson.
Lisa didn't introduce me, nor did Dion. So y'all, yeah, we know how you all get down.
So we got Eric Johnson with Goosehead here with us. He's going to tell us all about insurance and making sure that we properly insure our home, right?
Absolutely. So, do I get to tell you
Eric
who
with the
I am,
C.
or what do you want me to?
Well,
Eric
I was
with the
just going to
C.
say,
And
right,
if you're my friend, call me EJ.
right. I should have put quotes EJ after it.
Right.
So,
Are you
Eric,
telling me something, Dion? Are you telling me
right.
something? You're not my friend today.
No, let's say this. Lisa's the lender, and sometimes I have some influence as well. But we may send some clients to you because they need insurance.
Yeah.
What's the typical insurance that a person may start out with when insuring their home? Like, what do
All
they
right.
need?
So, with that being said, let's talk about the reasons why first. So,
Okay.
House Money Mama, when you go to House Money Mama is gonna lend you quite a bit of money on your home, right? And so as a result of that, the institution that is lending you the money actually has an insurable interest in the property. If something happens to that property, we don't own it initially because you put a 30-year mortgage on there. The bank is
Right.
still holding a note, and as a result of that, if something goes down, meaning that that house burns, unfortunately, a tornado, if you're in California, a sinkhole, or some unfortunate thing befalls your house, what happens, right? What happens to that house? The money is still owed to the bank, and so one of the things that we have to do, or the whys, is that financially the banks still require that their interest is protected, i.e., through insurance, right?
Yep. Did he freeze?
I think he did. Oh no.
Eric,
EJ.
there you
Am I
go.
frozen or?
You
Okay.
okay
All right,
now?
that's
You
weird.
froze for a second.
Yeah.
You didn't unfreeze me. Red light, green light. So, well, before this screwy signal gets popping again, there's a requirement, and it's done through a mortgagee clause and so forth. So one of the whys is that you have to do it to close. Is a necessity from the House Money Mama that you close, right? So you have to protect that interest. But personally, one of the reasons why you need to be insured is, as Dion has stated before many a times, this is one of the most fortunate parts of your life, that you're acquiring a piece of real estate that can sustain your family, create generational wealth, house you. It has a lot of your precious belongings, which are not necessarily all tangible things, i.e., your house, your furniture. It's your family. And so you want to make sure that that's properly protected. And what that looks like, without going into incredible detail, because I don't think this is the place to go into every detail that's encompasses a homeowner's policy, but you want to protect your interests. And so largely that falls in two major coverages, i.e. the home, which we call coverage A, the physical building. So we should be insuring that property up to what we call 100% replacement cost, not market value. So what I'm going to do is quickly talk about what market value is versus what is 100% replacement cost and what that means to you. Market value is this.
Perfect.
Dion finds you a house. she negotiates the contract and everything with you. You get the house for $250,000. Yeah, house money mama takes it, did all the approval and take it through there. Everything closes for $250,000. But then you talk to EJ and you read your policy, and that policy with the coverage A for the building, the house that you just bought for $250,000, your eyes kind of buckle a little bit and say, why does it say $500,000? I just bought this house for $250,000. Why do you have $500,000? Please explain that to me, Mr. Salesman. Why are you trying to take more money and make stuff from me? No, that's not what I'm trying to do. That's not what I'm trying to do.
Right, because that's the conversation you're gonna have.
Yeah, they get mad, right? Sometimes they get mad,
Yeah.
but because what you're comparing is market value, and it completely makes sense that you think that this property, because you just paid for it, should be $250,000. We should insure it for $250,000. But as the market appreciated, a year ago it was $200,000. Maybe 3 years ago it was $190,000. So, but insurance should be based upon 100% replacement cost, and replacement cost means if that property is destroyed, what would be the cost to rebuild it, right? So oftentimes the cost to rebuild and the purchase price or market value are two different things. Recently, that property of $250,000 that you paid for that might had a cost to rebuild of $500,000 as a result of the pandemic, i.e. shortage of materials, the cost of materials, logistics, and so forth, and labor, actually caused lumber, other raw materials to skyrocket. Therefore, a lot of times the prices fluctuate. The cost of rebuild, oftentimes, depending on the market, depending on the circumstances, are higher than the cost of market value. And how is that a good thing for you? And why is it a good thing? And how do you benefit from 100% replacement cost? You benefit in this way, that you're made whole. If anything befalls you, if that building is burned, that home is burned, you're not going to have to come out your pocket minus your deductible. If you created that and wrote that policy at $250,000 and it slipped by somehow, some way, and there's a 100% total loss, which happens quite a bit more than what the normal consumer knows. Unfortunately, I live in Plainfield. Fortunately, not unfortunately, but unfortunately, I think it was the Plainfield tornado was at least 15 plus years ago. Might have been 20 at this point. Those people went to sleep that night and woke up the next morning not expecting anything like that, but their lives were devastated, where their homes were completely torn down to look like sticks and everything. And what happens is you still owe the money to the bank.
Yeah.
You still have a cost that has to be paid for, and $250,000 is not going to do it, right? At least if you got $250,000 from the bank is straight. But for you still need a place to live. You're homeless. How are you going to rebuild? And so if you have a replacement cost, 100% replacement cost, we will be able to put you whole. So that's one of the reasons why that value difference. So that property needs to be insured up to 100% replacement cost. The other major coverage, which is part of that, which is your personal effects, your lovely plush leather couch that you just bought after closing, not before the closing. Like Mortgage Mama said, buy it after the closing. You don't want to put nothing on your credit before the closing, right? So you listen to her and you bought this brand new couch after the closing, right? You want that to be made whole. If a fire happens, it's usually a percentage of your coverage A. If you have a garage, that's also covered. Fences are covered. So those are some of the property coverages. House money mama likes to have big rings, right? I'm joking. She has, like diamond rings, right? And so if her 50,000 diamond ring that she has on her hand, right? Her fur coat like Ric Flair that she has on, right? See, that's a Ric Flair, right? Her gator shoes,
not Ric Flair.
All those items have special limits on your average policy. So there's another policy called a floater or an endorsement that we need to have on there to have the increased cost of coverage for that $50,000 ring, that chinchilla coat that she has. Woo. right? And all of those different things. So you have a property coverage. Now, the greatest thing that's on the line that a lot of people don't think about is liability, right? So we want that liability to at least, I say, to be 500,000 or more, right? So the
Okay.
liability is basically slip, trip, and fall, and some different things. So Dion had me come over and move her couch, and then and the couch was real heavy, and I didn't warm up that day, and then I tore a bicep. I'm in the hospital, laying in the bed. Dion and House Money Mama say, "Hey, here, EJ, here's some drink, and here's some flowers. But I got this big hospital bill. How am I gonna pay for that?" The liability coverage on your policy, your homeowner policy, should cover that. If I came and slipped, tripped, and fell in a party, if this phony pool that I have behind me, and unfortunately someone slips in there and suffers some sort of death, liability will cover that. If these dogs that we have, right? I have a nice dog that somebody I know want to steal my dog, but I'm not gonna say those people's name. But if somebody did try to steal my poor Winston, but anyway, that wouldn't be covered. But if somebody came on my property and Winston got aggressive with you and bit you in the butt, or something like that, that liability coverage for there also. So there's those are the major policy coverages where the property coverage, I didn't go over everything. And with the property, that's pretty much it. The house and any tangible item that you have in, and then a liability, slip, trip, and fall. There is some other liability that arises out of there. But another coverage that we'll talk about, and we probably got some questions with this, is water coverage, right? Backup and sewer and drain and so forth.
yeah.
We can talk about
So
some nightmare scenarios
that was
with
the thing I was going to bring up, right? So a lot of
Yeah.
people, everybody's always like, I need some flood insurance, but there's different types. Like we've talked about this before, as far as the terminology, flood insurance, and what actually is being covered. So if someone receives water in their basement, how are they covered?
Okay, so one of the things with insurance that we were discussing before we started was it is incredibly litigious. Well, all of the contract is all contract law. Words mean things, right? Specific words, and you have your technical terms that the average customer is completely unaware of in general, and then there's technical terms that actually specifically mean certain things that we have to be very careful of, and so it's really separating and understanding that. So the term flood to an insurance professional, i.e., agent, claim adjuster, and anybody on that side of the world, specifically means certain zones that are deemed, there's a flood map, right? And it's controlled and managed by FEMA, right? So the Federal Emergency Management Authority, I believe, is its authority. And then as a result, they created the NFIP, which is National Flood Insurance Program. So what they consider a flood, think about Katrina, right? Think about true flooding situations when a dam was broken or something like that, where it's actually wind driven and it seeps into the house and it's truly like biblical proportions. That's a flood. In Chicagoland, in April, when I wake up in the morning, flip on the lights, I'm getting ready to run downstairs to get my socks out of the dryer, and then my foot hits the ground, and dang, I got water, right? My basement flooded. That's not flooding, technically. But what I would say is you have water or flood as a result of what? Backup and sewer drain. Where did the water come from? Seepage, right? So it's really, what it is where did the water come from and what caused the water? So that's called water backup and sewer drain, or some type of backup situation. So that's not necessarily, we call it flood, and technically, I mean, we wouldn't be incorrect with saying that, but from an insurance standpoint, that's not flood. The most of the people in this area, and if you needed, one of the key things that you could tell, that is, if you needed flood insurance and you truly needed flood insurance, who would, on this panel, who would tell you, who would be one of the, you would
I
actually, without
would.
being dramatic, the first two people, House Money Mama is not going to give you money without having flood insurance. Dion,
Mm-hmm.
being the professional she is going to make you aware that your home is in a flood zone,
What zone?
right? But
Mm-hmm.
just
Right.
because you're in these zones doesn't mean that it can't happen to you. These flood
Right.
zones are.
Uh-oh.
You Kyle, we can't hear you.
He's getting a lot of good information too.
I know, right?
And this is exactly what we want to talk about tonight. Are you back, Eric, with a C?
Can't
Mhm.
hear you.
Like, let me figure this out. It looked like he just fell in the pit.
He went in the pool. He took a dive for a minute.
Is Eric drowning? Send somebody over to his house.
We can hear you.
All right, I'm back. Can you hear me?
All
Yeah.
right, yes.
I switched my headphones. I had a call coming in. But when we talk about that, you would know if you're in the flood zone because your real estate professional, i.e., your lender and your realtor, would let you know that you need that, and it is your closing or is contingent upon having flood insurance. But in regards to backup and sewer drain, if you currently have your house, you would see that under like water coverage, backup and sewer
Yeah,
drain, and that would be if your sump pump failed, or if there was some drainage backup from like the Chicago. In Chicago, you have a lot of issues with the roots from the trees that are so old, and then you'll have the
yeah,
lines will get clogged and the water will back up, and it smells kind of foul. That's flooding from water backup, and you need to make sure that you have that on a policy. A lot of insurance agents tend to leave that off at times, and they leave it off. A lot of times it's because it's a little bit more of an expensive coverage, but you would rather be properly insured, or at least to make it, the decision is
yeah,
yours, that if you want to accept that risk and not have it, or you want to pay for it. But unfortunately, everybody, just because you have a license doesn't mean you're a professional, right? And so you want to make sure that that person is providing the proper education for you and explaining everything thoroughly to you to make sure that you're properly protected, because it should all be about the customer first, not if I secure the sale or not. But that's one thing you definitely need to watch out for.
so
Okay.
You don't
important.
want
That's the one of
soggy
the things.
socks.
Right.
No soggy socks, right. But
Exactly.
we've had a number of people over the past couple of years that have had a problem with the water backup, the
Yep.
water, having an issue with the water. And I think because, it's just one of those things where we've had a lot of precipitation over the past few years too, a lot of
Mm-hmm.
snow, a lot of rain, longer
Yep.
springs, earlier autumns, stuff like that. And it's, I guess once you get to a certain age in the environment, it can happen.
Yeah,
Right.
and then also it's too late to add it once it happens. There's usually a
Okay.
moratorium in which you have to wait a period of time after it becomes effective, because unfortunately, the industry has seen quite a bit of people that call after it happened and saying, "Hey, can I add
Mhm.
this?" No, in the future you can. So another
Mhm.
thing that's a trigger. Sometimes if you have a raw basement is unfinished, then all of a sudden you finish the basement, you'll forget. And that's why another reason why it's important to have a relationship with your insurance professional. And you actually should have an insurance review at least once a year, no less than twice every 2 years. And then
Mm.
one thing that I know my captive friends are not gonna want to hear. The word captive means that they only have one insurance company that they represent. There's a lot of great ones out there, but I'm a broker, like the money mama, mortgage money
House
mama,
money mama. That's right.
house
We
money
broke the
mama, house
brokers
money.
are
We
better.
brokers. Yeah, brokers are better because we have really, why it's better because there's more options for you. I'm not
Yeah.
beholden to any company. I serve the client, and I'll find the best coverage from you amongst 40 plus carriers. But with that being said, you should reshop your insurance every 2 years, because rates go up, rates go down. But the coverages that we offer are all from A-rated companies, and they do not change. I don't have to compromise that. But a lot of times when you have one option, you sometimes things get compromised. Sometimes a person might carve this off or leave this off because there's not very many options. But the truth of the matter is that you should get your policies reviewed at least annually, potentially the worst every 2 years.
Okay. As a if your clients don't review them, do you guys review to say, okay, the market has changed, house values have changed? Do you all do anything like that to let your clients know?
Well, once again, being the former underwriter, most policies have this thing called pace. So most of the policies pace up with inflation, right? Naturally. But as far as understanding the life changes that goes on, that things should be caught, we do have touch bases with our clients that go out automated, and getting them to actually trigger conversations with us. So yes, there's some things in place for that. But as far as the escalation and coverage in regards to the coverage A or the home, there's a thing called PACE, or there are a lot of clauses that actually pace it up a little bit. And you'll
Yeah.
get it in your renewal too. You'll see how some of those have changed. Now, all insurance companies are function similarly, but there are some small differences. But as long as you're with a solid A-rated company, most of those do have a element of pace where they pace
Okay.
up. Yep.
All right. Well, I asked that because a lot of the house values of your homes are going up, increasing. So that's why it's important for you to really look into your insurance as well and make sure that you're covering, the value of your home. So in case you need to rebuild, so maybe you might have bought it, for less, but now you need to rebuild it, it might cost more. So,
And I, just a side note. So earlier we were talking about investments. So if you have a apartment building or if you have a commercial space, a lot of times that's not. I'm going to say certain policies in certain cases, depending on how they're written, that pace or that natural hedge against inflation is not in there. If your policy has what they call co-insurance, there's a co-insurance clause. Once again, you're not going to really find that. You're not going to find that on homeowners, but like commercial buildings, apartments, and so forth, there's a co-insurance clause. Without getting into that and confusing people with a few minutes left, that does not happen. And this type of thing that's going on with the increased cost of labor and raw material, it actually forces your co-insurance clause to kick in place. Because basically what that co-insurance clause states is if your coverage A is not maintained at a certain particular level, if there's a claim, there's an extra penalty. That's why I feel personally that co-insurance is oftentimes is a disservice to the insured because they really don't understand it. It's not a bad thing. It's a bad thing if you don't understand it. But as long as the customer insured understands what they're assuming, the level of risk that they're taking, and how much risk that they're going to take, and how much the company's going to take, and as long as they understand that, it's not a bad thing. But most people truly don't understand it, and I believe that's partly the fault of the insurance professional and maybe potentially the fault of the customer. But all the time, when that does happen, when a claim comes, that person's upset. I thought I had this, I thought I had that, but oftentimes that's not the case. So if you have co-insurance on your commercial property, please check into that.
all right. All right. So
Right.
today we had Eric Johnson with Goosehead Insurance with us. If you need to get a quote for your insurance, give him a call. This is his phone number. This is his email address if you ever need, right?
Call.
So give him a call. He's here. As he said, he's a broker. He can give you the best quote for your property because we all need to make sure our property is insured. If you're buying some property and you need to start off with your pre-approval, call Lisa. That's kind of trying to go in and out of the camera. Lisa White. She's here for you to give you a pre-approval, and then I can help you find your house. So
Okay.
Well,
All righty then.
Awesome.
right. Join us each
And
week at Water Cooler.
the team.
Huh? What you say?
I said, and we're only half the team. We got a whole team.
Right. And we have a whole team of people that can help you through the process. So
Yeah.
thank you, Eric, for joining us. We really appreciate you stopping
Thank
in.
you. Thank
Great
you.
job, DJ, as always.
All right.
Thank you.
All right. Good night,
Time for
everyone.
dinner.